Hi, and welcome to TMC Connect. Thank you, everyone who has joined us today. We've got a great presentation for you on the assistance program with Chenoa Fund. Do you Chenoa Fund? Um, Love that. We're going to have a full house of panel discussion here. We've got some lenders as well as preferred partners for TMC. So thank you all for being here. Want to give just a couple of highlights here is that everyone will receive tomorrow a follow-up email. It will include a link to the recording for this, as well as, and I'm not going to steal Jennifer's thunder, but she's created something as a follow-up for everyone. So that will also be included in the email that we send. I'm Tony Bramley. I'm the Business Development Coordinator here at TMC, and we are so happy to have Chenoa Fund with us, one of our great preferred partners. They are going to give us some information about loan assistance program because that is so top of mind for all of our lenders today. I'm going to turn it over to Sean and let him introduce everyone, but thank you so much for being here. You did come in on mute, but we do want this to be engaging, so please drop your questions, comments for the discussion leaders in the chat or the Q&A function, and we will address those at the end of the presentation. Thank you so very much, and Sean, take it away.
Thanks very much. So, hey, this is Sean King with Chenoa Fund, and I'm going to do what any smart person does leading a presentation. I'm going to defer to Carrie because I want her to introduce herself and then introduce her special guest, and then I'll loop back in after that, and we can move forward with the slides. So, Carrie.
Thank you, Sean. I am Carrie Zwick, and I am with Chenoa Fund. And I do work right alongside of Sean, and he is going to give us a fabulous presentation today. Then we're going to be joined by Jennifer Long, and Jennifer is going to tell us exactly the client perspective that we should be seeing for each one of the products. And then Jason is going to jump in, and he's going to tell us why he decided to join the correspondent lending group of Chenoa Fund. So Sean, take it away.
Okay, I'll come back. All right, so let me just say just a quick note about Carrie. Carrie and I compete every single month, and for the most part, I mean, it's a dogfight, and she's a fantastic competitor. She's a fantastic account executive. And when I heard her guest speaker today was going to be Jennifer Long, I cried some bitter tears because Jennifer, if you remember, you used to be one of my clients with a previous mortgage company, and when you said that basically you're moving over to one of Carrie's clients, it hurt my feelings a little bit. So I feel my heart. If I start crying or whimpering in the background, you'll understand exactly why that's happened. But I've got Jason here, also Jason Smith with Nova Home Loans. I'm excited to have him have his perspective. His team does more down payment assistance every year than most companies do, and he's one team of many at Nova Home Loans, and so he's very experienced in putting these transactions together. He's going to be just kind of offering some of his insights as we go through this. And then, of course, Jennifer's going to wrap up with some amazing things that she's learned and kind of packaged, it sounds like, to make these things work. And so let's go ahead and get started with the slides. So the Chenoa Fund is actually, that's the name of the products. The company name is actually CVC Mortgage Agency, and that stands for Cedar Band Corporation Mortgage Agency, and it's owned by the Cedar Band of the Paiutes, and that's out of southern Utah. And so we are a Native American tribe, and we are a federal entity. Okay, and so as a federal entity, we have a federal charter, and we can provide second mortgages on FHA loans. And we choose to work in every state except for New York. We have a national footprint. We've been doing this for about 6 years. And some of the benefits of working with us, let's roll it back a little bit so I don't mess up my talking points, is the rates. We have one consistent set of rates, one consistent set of guidelines for every single state, and which is nice because if you're a large national footprint lender, you're going to be able to just implement our program and it works everywhere. You don't have to learn and set up a bunch of new programs. It's nice. And the other thing that's really nice is we do bring competition to the market. So when we entered the market 5 or 6 years ago, these HFAs had the run of the market. They could set the price. They could do whatever they wanted. They could be as competitive as they wanted to be. They could be as fast as they wanted to be. When we entered the market, we induced a lot of competition, a lot of rates, and ultimately it's benefited the borrower. So let's go ahead and advance now. Sorry about that, Tony, for not being clear on my slide push there. Okay, so census data, 50% of US children under 18 belong to a minority demographic. And by 2045, America will be a majority minority country. 55% of the borrowers held by us are minorities. And so we do a lot of minority work. And I think that for certain demographics, we do more in those demographics than any other housing finance agency nationwide. And so we are also committed to sustainable home ownership. We give 18 months of post-closing support. We do pre-purchase homebuyer education, and loans on average outperform FHA, and they outperform HFA, most of your state HFAs also. So being part of this community, we try to be dynamic in how we get things done. And so one of the things that we try not to be is the DMV. We like to joke, and if any of your family members work for the DMV, then fine. But most of us have images in our mind of these long lines and taking forever to get things done. We try to not be that way. And so our loans, we can purchase loans in 8 business days. That's about our average. So we're lightning fast in purchasing those loans, getting them off of your warehouse line so you can return to doing what you do well. We have dedicated customer service staff, and we provide support within the hour to get everything that you need taken care of. And then I might also add on this that our pre-registration, our pre-close process can be done in about 20 minutes. The only thing you upload prior to closing is a Fannie Mae 3.2 file of the first mortgage. That's it. There's no underwriting step on the front. It's your underwriting. Our job isn't to tell you how to be a good underwriter. We purchase your good loans, and we rely on your seasoned underwriters to make those calls. Let's go ahead. So we have a couple of down payment assistance options with FHA insured loans. We have basically a rate advantage and a DPA edge. Okay, and so they both offer a 3.5 LTV and a 5% LTV option. And so just kind of to give you the outer boundaries of these, you can go down to as low as a 620 FICO on our FHA products. Our DTI, you can go clear up with some programs in the right FICO, you can go clear up to AUS approval. So the highest I've seen is a 57.4 AUS approval. And so we will take that on certain programs. And then our programs, we have a forgivable option, which is nice for borrowers that meet a certain AMI requirement. And then we also, if you can't meet those housing finance agency AMI requirements or ours, then we have a no income limit product. And so one of the nice things is we see that in every single market in the United States. People are limited in what they can make and get access to down payment assistance. We don't have those limits. We also have some DPA options on our Fannie Mae conventional stuff, 640 FICO. We offer a 3.5 DPA with that. So it's a half a point towards closing costs versus FHA, where we're doing a down payment and then we'll do a down payment plus a 1.5 of closing costs. So we accept AUS, DU findings with minimal overlays. And again, as I said, we have some no income limit options on both Fannie Mae and FHA, because making too much money should never be a reason to exclude somebody from down payment assistance. Okay, so the screen's a little bit to the left here, but I think I've got 3.5 and 5% DPA. The benefits, just market competitive rates on the first mortgage. I would say that we're typically in line with the majority of housing finance agencies out there. We're competitive in our rates, and then we're also competitive on what we pay. We price these things aggressively to where you're going to outperform most of your other HFAs by about 50 to 70 basis points nationwide. And so rather than these things being a loss leader loan that I just do because I know I'm going to recoup them down the road, this is something that actually can have a slight, profitability. We know these aren't as profitable loans as some of the other ones that you could do in your portfolio, but definitely it's something that helps out the community. It builds a book of business down the road, and they do perform better than some of the other state options that are out there. And so it just talks about program qualifications. Their 640 FICO score, qualifying incomes less than 135 AMI. So basically, rather than getting into the nitty gritty, we have a 115 AMI level, a 135 AMI level, and a no income limit level. Okay, so rather than getting into the all the DTI and all those kind of things, income, we have 3 different tiers. The lower tier typically will allow you to get access to our forgivable second mortgages. The higher tier is a repayable second mortgage, which typically gives a better interest rate, a better return over the life of the loan. On a $200,000 unit with that better tier, you'll save about $12,000 over the life of the loan. So it's just a better deal for the borrower long term. And then we have that no income limit product also. Let's move on to the next one. And so the soft second, the way that it works is if you do a 3.5 LTV on this one, it's forgiven after 36 consecutive on-time payments on the first. So you just have to be clear with your clients that they have to make all 36 payments on time. Any 30-day late resets the clock. On the 5% option that we offer, they're going to have to make 10 years, basically 120 consecutive on-time payments, and have no 60-day lates. So there's a forgiveness period for both of those. Obviously, some people need to move before that period. If that's the case, then they're going to pay off that second mortgage if they move before that 3-year period or that 10-year period. Okay. Down at the bottom, if we're talking about program qualifications, it's 620 FICO for those soft seconds. And we use the term soft second. That's the name that we have for a forgivable second mortgage. So our soft second is our forgivable, right? And by the way, these are fully disclosed, fully recorded second mortgages that live on title. They aren't some kind of silent situation. These are actual liens that are on title. Okay. So it goes down to a 620. We have some debt to income benefits on these soft seconds. Again, you can go all the way up to AUS approval if you have the right FICO score on these. And then the various tiers that you can kind of see there, I have a 45, a 50, and then AUS findings. But let me just say, I'm going to pause right here. At 640 to 659 to go up to a 50%, we actually have the ability in that FICO band to flex all the way to AUS approval. And so that's a distinct advantage. And then at actually from 620 to 639, it says 45 or less. We have the ability to flex there up to a 50 DTI on that one. And so most of your housing finance agencies, this is critical, most of your housing finance agencies won't go below a 640 FICO score. And if they do go below 640, they're not going to go above a 45 DTI. So the ability to go above 45 DTI up to 50 DTI below 640 is a distinct advantage. Those 5 percentage points are huge in most markets in the United States that we're competing with. And so that's something you'll be able to qualify a few more borrowers with. Okay, so the repayable second is basically our product, the no income limit product. And so the only time we ever use this is when somebody makes too much money to qualify for the 115 tier for forgivables or the 135 tier for the rate advantage products. And so if I'm making more money, I don't care if it's $1 million a year, you can use this product. And it's a 3.5 LTV DPA. And it does have a choice of second mortgages, which is going to be either a 0-10, so a principal only for 10 years, or a 530, so 5% 30-year term on that one. Most people go with the 530 because it's amortized longer, so it's a lower payment amount. Go ahead and keep moving on that one. So our home ready option is a nice option. I have to give you a little bit of a disclaimer here. Home ready, we have the option for Fannie Mae, but here's the thing, we're not HFA preferred, we're a community second. So our pricing isn't great yet, but it is an option if you need it, okay? So we offer 3.5 on the DPA, and that's obviously 3% for the down payment and a half a point towards closing costs. The second's gonna be 2 points higher than the first on a 10-year term. So I think our rate is what, 3.625 today on those. And so our second's gonna be 5.625 on that over a 10-year term. It's DU, the MI coverage is 25. Again, that's a little bit higher than what you get with an HFA preferred program because we're a community second. And then you don't have to be a first-time home buyer, and you do have to take a home buyer education class on that one. And then we have a conventional option, no income limit on this one, which is one of the nice things about this product. It's going to have exactly the same setup, a 3.5 DPA LTV on that one. The MI goes to 35. One of the borrowers has to be a first-time home buyer, and a home buyer education class is required if the LTV is 97 or higher on that one. 640 FICO, and then again, no income restrictions. Whereas the previous one, that Fannie Mae Home Ready, I think it's 80% of census income tracked on that previous one. So moving right along. So just some closing things. Through our program, the goal is to close that wealth gap. 55% of our loans are for minorities. And obviously, homeownership is a huge piece of wealth accumulation, especially over life. Think about the amount of appreciation that's happened in the last 18 months. It's phenomenal for some of these people that are they're really starting to kind of move ahead and move out of those lower tiers and being, filling and rounding out the middle class. We offer leads to lenders. 1 out of 3 leads ultimately qualify for DPA, while other leads allow more, traditional loans. We do that basically because we get in our website 1,000 times a day with borrowers asking about our program, and we rotate those on a round robin basis. We're trying to automate the process to where it works a little better. We try to give excellent support. Obviously we have account executives, we have sales support staff, we have scenario desk, we have all these people that their whole goal is to have velocity and responding back to you, to getting you the answers you need so you can be successful. And we realize that sometimes dealing with housing finance agencies can be difficult. So we try to make it as painless as possible. And then the pricing on these allows you to make a little bit more money. right? So we allow up to a 1.5 origination fee. A lot of your housing finance agencies have a cap at 1%, one point origination. Now, if you're doing a lower, let me just say this also, if you're doing a lower loan amount, that can be difficult. That can be rough. If I'm doing $120,000 and I've got a fixed processing fee, I've got fixed underwriting costs, and I'm charging, whatever it is for origination. If they have some kind of limit on that, that's like half a point or a point, you're not making very much money on those loans. So one of the things that we do to help stimulate that is we actually pay an incentive for lower loan amounts also. And that gives you a bump, more of an incentive to do those loans that are below $120,000, because we are serious about helping low to moderate income home buyers increase home ownership. But also, obviously we allow you to charge up to 1.5 origination, and then you can charge on top of that up to your QM guideline 3% from the loan. You can charge your processing and underwriting admin fees and all that on top of that up to that QM guideline. And then obviously that turn time, like we talked about, 8-day turn time when purchasing a loan, we're really pretty quick at getting these loans purchased. So let's move to the next slide. And I think, if I'm correct, Carrie is going to take over and give a few things. Did I just keep talking too long, Carrie?
Oh, heavens, no. We always love to hear you, Sean. We love your thoughts and your information. Absolutely. But now the great part of the presentation is about to begin, and that's with Jennifer Long. Jennifer has put together some items that will really interest you as the manager, loan officer, or the decision maker in your group as to how you can actually make money and you can put things together that make sense for the clients. And here is Jennifer Long of Cardinal Financial.
Well, thank you guys for inviting me to talk about Chenoa today. Anyone who works with me here at Cardinal knows that I'm very passionate about this program. I'm in North Dakota, and we really don't have much in the way of options when it comes to no down payment programs for customers. And so this product was really a game changer for us in North Dakota there. And I'm sure there are lots of communities around the United States that are in the same situation as we are, but really you can use this other than New York. This product is just an awesome product for so many reasons that I'll get into here. So I'm kind of speaking to two different audiences here. So I'd like to start off by talking to the business owners and the branch managers just like me who run an office with loan officers and on a day-to-day, why this particular product is such a great one for you to consider to offering to not just your loan officers, but to your communities. So to the business owners and the managers out there, here are the reasons why I really enjoy using this product and what it's done for my business. So the first reason that I love this product is that it's super easy to teach. So offering this product to my panel of loan officers, and not just even in my office. In fact, I do workshops for offices all over the country for loan officers interested in offering Chenoa. But because and I will clarify one thing, I know that the Chenoa offerings are in conventional as well as FHA, but we pretty much just focus on the FHA variety of the Chenoa product. So I'm going to be speaking kind of just to that government market. So again, the first reason is it's such a teachable product. If you can teach an FHA loan to your loan officers, you're definitely going to be able to handshake right into the, how this kind of springboards into being a great product for your loan officer to have to offer to their clients. So super easy to teach. The other reason is that it's more profitable for you as a manager and as a P&L potentially than other bond programs or other public assistance programs that are out there. The Chenoa product definitely has a nice, more profitable bottom line for you. So that's another reason why I really kind of gravitated towards this compared to the other things that we could offer in our markets. It also kind of increases your competitiveness. If you have the ability to offer no down payment assistance programs, to your neighborhoods, that is going to make you more competitive. But the other reason that I liked this particular version is because the contract was very friendly to us as managers. The early payoff penalties, or There are no early payoff penalties that, so compared to other products that we might select, this one was a really great one to offer because of the protection that we get on those contracts, and how sometimes the down payment assistance programs can flip very quickly. So in neighborhoods all over the country, and I was so glad that Sean had mentioned, you know, diversity and, you know, assisting neighborhoods in the wealth gap. Having a grant program that you're offering to your community is such a it's a timely thing. Being able to say that you have a grant program for your neighborhood. This was a really big component for my office because I had no other options, very little other options. So being able to add a forgivable second to our loan offerings was a great way for us to be able to position ourselves in our neighborhoods. The underwriting. The comparable product that we use has to be underwritten 3 times. So when Chenoa came along in North Dakota, and it's a one and done, one underwrite and you're done. So you're going to save money on the inputs. You're not going to have your staff spending as much time kind of grinding through the process and having to submit that loan for all the different layers of underwriting with typical public assistance or bond programs. This is your underwriter gets done with it and you're ready to roll. So your time invested is going to be a lot less. And your customer is going to be a lot happier because you're going to be able to close it in a much shorter period of time. So they're quick. And the cultural influence, you know, I tend to say that I like my loans to kind of mirror my neighborhood. And this is one product that I think that really does a great job of that. A lot of underserved communities have very little access to products like this. And having this in the loan offerings that I provide my loan officers out into our neighborhoods has just really been a great way for me to kind of check that cultural impact box and be able to say that this really does promote diversity. And I think that's a very good thing for our market all over the country. I think the industry definitely needs more diversity. And I'm really glad to say that this definitely helps us with that. So that kind of wraps up the business side for the managers out there. I think those are some really impactful ways that it's helped my business and position me as a strong provider in my neighborhood. And I'd like to speak to the you originators out there because I also originate loans, so I can definitely relate to you out on the front lines. So here's some really great reasons why, if you're an originator out there, you really want to consider this. So the first category of reasons is that it solves your customers' problems. So being part of the solution is always a great place to be. So when your customers come to you with problems that this program solves, such as high income, I mean, you know, who would have thought that we would have had a whole new demographic of high income, no down payment customers? Well, up here in North Dakota, where we have the pipeline, the oil fields, we've got lots of high income earners, no down payments. So this was definitely like the perfect, like tailor-made program for my market up here. So this was definitely a problem solver for high income, no down payment customers, easy to sell, quick to close. You know, it's, you know, people would tend to, you know, almost fight to get one of these. They tell all their family and friends, which is really great. Higher debt to income ratios than some of the other products that we would offer as a no down payment assistance, like USDA, very strict on those DTIs. With that FHA kind of bucket, that net, and getting your, you know, approved eligibles with your AUSs on FHA, you're able to go all the way up to that 50%. And that has just definitely been a huge problem solver there. And no geographic restrictions other than New York. So you're not having to like pinpoint on the map exactly where the house is located. You just know if you can do an FHA in that market and you're not in New York, you can definitely offer this product as a great problem solver. So the next reason that I think for you loan officers out there that this is a great option for you is that it increases your referral partners. And here's how I use this product. It's a great way to open up the doors for any real estate office that you're not currently doing business in. So if you go out there and say that you've got this product that's a super quick, no down payment assistance program that people with, you know, any income level can qualify for, they're going to want to know more about this. They're definitely going to want to hear about this. So even if you haven't been able to get into those offices, you go in with that pitch, they're definitely going to want to ask you. And I'm going to get into another reason why they're going to want you to do that. So once you do start to work with your referral partners, with the Chenoa product, one of the things that's awesome about this is that you're working together. So you're kind of structuring the deal from the very beginning. So as you're working with your realtor partners in structuring and negotiating those contracts that the customers are going out to make offers on, you're working together to make sure that you're ticking off all the boxes. By going through the process of doing that, you're building a stronger relationship with those referral partners. And that engagement is always a good thing. When you are working together to solve problems for your clients, putting your customers first, this is a great position for you to be in. And then the last reason why increasing your referral partners using the Chenoa product is so awesome is because I call it the scarcity advantage. So think about this. If you're out there and talking about this product and you're not getting into those realtor offices, here's what they know. And here's what you can kind of hint at. They know that all the other realtor offices in your market are definitely going to be talking to you. So they want to know what you're offering so that they have that you have that scarcity advantage, that if you're out there producing these kinds of loans and those customers are going to the realtors that you're working with, believe me, that's definitely going to be planting a seed into those offices that don't currently work with you, that are definitely going to want to get that appointment to have you come in and present this so that they understand what it is that you're offering. And once they know what it is that how you're positioning your clients in the market, they're definitely going to want to remember to use you the next time that they have one of the customers that would fit that profile, which doesn't take very long. And that gets me into my last kind of bucket of reasons why this is such a great product if you're an originator. It increases your applications just overall. So it's the bottom line, making more money. So not only do you make more money because you're able to provide a solution that you might not otherwise have, or it's a better solution than what you currently have on the table. But here's what typically happens. People will apply, or they'll come to you to talk to you about the product, and they'll try to see if they can qualify. But those applications don't always end up in the Chenoa bucket. They might end up in another bucket, but these are customers that you might not have had if they hadn't called you for that no down payment assistance call. So you're going to have more applications coming in the door, whether they all go to Chenoa or not. That's just more applications and more profit for you. And so, by having a nice range of products where you have a really strong no down payment positioning, that is really kind of a complete offering. But here's the best part. We all talk about referrals because those you don't pay for, right? So we always want to be in a position to where our phones are ringing and we're not paying for those leads. That's one amazing thing about this product. When people get pre-approved for these and they know that they're about to buy their dream home with no down payment, and they couldn't get qualified anywhere else, they're not just telling their realtor or you, they're telling everybody. They're telling their family, they're telling their friends, they're telling their coworkers. So those referrals are not taking 6 months, a year, or 2 years for you to get those referrals. You should be getting referrals within 10 days, 7 days, 2 weeks. You're going to be getting calls from those people that these people are talking to say, hey, I heard my coworker is doing this. Can you tell me more? So that is another reason why the Chenoa product is so great for loan originators out there. So that pretty much wraps it up for me. But thanks so much for letting me talk.
Thank you, Jennifer. And Sean, I am going to let you introduce the famous Jason.
Well, I think he's ready to go, so I'm going to get out of his way and let him talk. And thanks for that great information, Jennifer. I think you covered a lot of things that I didn't think of, and I like the scarcity advantage. That was nice, a nice way of putting it, because everyone is always jonesing for whatever they're missing out on. If they lose a deal, then they want to know about the program. Go ahead, Jason.
Hey guys, sorry, I kind of cut Sean out of the screen there for a second when I turned it, but
that's okay.
Basically, background on me, I've been doing this for 17 years. On Scotsman Guide, I was 129th top producing LO in the country last year, and a vast majority of my business is probably 35-40% of it is DPA. I had pushed for the Chenoa program before, and then when it came back again, I was a big advocate for pushing for it again. The reason being is they are way more flexible in the debt to income ratio than most of the products that I primarily deal with, like the Home in 5 or the Home Plus out here in Arizona. They're way more flexible in debt to income ratio. Plus, there's a little bit more makes sense involved in this. One of the nice things is I'm ex-military. I do a lot of VA loans, and one of the loans that has the lowest default rate are VA because they follow residual income. Well, with the Chenoa, they're able to go higher on debt to income ratio due to credit scores if you have, as an exception, the residual income for VA. So what does that mean? If it has the lowest foreclosure rate, they're doing things to help the borrower by using this to enable them as a vehicle to get more deals done. This product is taking the place for a lot of those other DPA programs for me because of the flexibility. But not to mention, in a highly competitive market like we're in, you really got to get creative to get offers accepted, right? So if you have clients that have the money to pay over appraised value, right, to get the offer accepted, but they don't have the money for down payment and closing costs, then why are we not pushing these more? And I can tell you, the amount of these loans that I refinanced last year was incredible. And this year going forward, I'm still refinancing lots and lots of these. So you're creating a constant pipeline and referral network. I'm just a huge advocate of this program. I push with my company to get it back here because think about this. If you're getting borrowers into homes and they have money in their bank account still, who's going to default quicker? The person that doesn't have money or the person that has money in their bank account? So it's a great vehicle. I mean, I don't know what more I can say, Sean. What else would you like me to add? Anything else? Or
Well, no, I mean, I'd ask for stupid things like for you to flatter me and that kind of thing in front of everybody.
well, you're a handsome man,
Well,
so you know.
Sometimes.
Okay, and we're taking it back from Sean and Jason. Thank you both very much. Tony and Amy and TMC, we would just like to thank you so much for this opportunity as a panel to address all of our partners out there with TMC. So thank you again, and back to Tony.
Well, thank you. Thank you so much, Carrie. Thank you, Sean. Thank you, Jason. Thank you, Jennifer. Okay, Sean, I do understand why you were crying that Jennifer was no longer your client, and feel free to sob freely because I do get that. Jennifer speaks with such passion for the product. You can really tell that it's something that you're passionate about, and that's just that's telling as to what Chenoa brings to the table to have clients. And Jason, you're passionate too. Maybe more about Sean's glasses, but definitely. So anyway, well, thank you guys so much. We really do appreciate your time, your expertise. We appreciate your partnership. Just kind of as a follow-up for us, want to be sure that everybody knows that you will be getting you'll be getting a follow-up email. And Jennifer, if you want to tell a little bit about what you've got going on.
Yeah, I totally forgot to mention this. I actually created a class for everyone on the call today. It's just a simple how-to that I go into depth about how I structure each of the profiles of clients. I have 5 different clients that I sell this to, and I go into how the conversation that I have with the realtors, so how I get the realtors familiar with the product, and then I go into detail on how I sell this to the customers, so that it just kind of helps you smooth out. So it just helps you identify specifically who this is going to help, and then takes you through the steps on how I set that up for those conversations. So 5 different customers specifically for this product. And the link for the class will be in the email tomorrow. So.
Excellent. Yeah, well, and thank you for that. You're sharing your secret sauce, and we really appreciate that because that's fantastic. Yeah, so there will be a follow-up email. The link for the class that Jennifer has created will be part of that email, as well as a link to the podcast and the YouTube video of this session. So thank you very much. This is TMC Connect. Please feel free to come back often, Tuesday through Thursday. We have these and we're always talking about great things. So thank you guys very much for your attendance. Once again, Chenoa, thank you guys very, very much for bringing your expertise to the network and being such a fantastic partner of ours. So thank you all, and I hope everyone has a great week.
Thanks, Tony. Thanks so
again,
much, Jennifer.
everyone.
Carrie,
Thank you.
Thank you very much.
See y'all. Appreciate you.
Bye-bye.
Bye, everyone.
day.
Thank you so much.